Welcome to ForexTV.com. Today is Tuesday, November 18th. I'm Kathleen Reddington with your New York Forex Market Buzz. The Japanese yen has fallen to the dollar and the euro for the first time in 3 days. And now for a look at the latest headlines from the CEP News Desk. The headline measure of producer price inflation fell more than expected with a 2.8% month-over-month decrease in October. This pushes the annual advance to 5.2%. The core measure of PPI rose 0.4% in the month, resulting in a 4.4% rise year-over-year. Economists were expecting core inflation to increase just 0.1% in the month, while the all items index was predicted to decline 1.9%. Net long-term Treasury international capital flows came in well above the consensus forecast, totaling $66.2 billion in September, while total TIC flows for the month rose to $143.4 billion. UK inflation slowed to 4.5% in annualized terms. Economists had expected a rate of 4.8% for October, down from the record high 5.2% registered in the 12 months to September. Treasury Secretary Henry Paulson defended the changes made to the $700 billion bailout bill. The TARP program was expected to buy troubled assets from bank balance sheets, but has instead been used to take equity stakes in troubled financial firms. Paulson defended the change of the course, saying the efforts already underway will do more to prevent foreclosures than might have been achieved through very large purchases of mortgages-related securities through TARP. Today we are joined by Brian Dolan of Gain Capital. Hi Brian, how are you doing today?
Good afternoon, Kathleen.
All right, so we're seeing the dollar make some gains today, considering all the perceived risk we have with the world in a global economic crisis. Do you think it's right to be bullish on the dollar right now?
I do. I think the main correlations, the main relationships between the stock markets and the currencies are likely to persist, and the overall pressure on the stock markets remains. The economic outlooks across the globe continue to deteriorate, and so does investor sentiment. So I'm looking for a renewed downside push in stocks, and this is likely to see the dollar go on to make new highs, and then also for the euro and the yen crosses to also move lower.
All right, and the PPI fell more than expected, but it was largely based on the fall in oil prices. Is this just a wolf in sheep's clothing, and how is this going to affect the marketplace?
Inflation is really not on anybody's mind right now, given the economic uncertainties that we're facing. What is very likely is that national inflation rates are likely to fall sharply in coming months as economic growth continues to slow. And then that's also going to continue to undermine commodity prices, which will keep that virtuous cycle of lower commodities, lower inflation in place for certainly the next several months. Inflation doesn't become a concern unless you're looking many, many years out at this stage. At that point, then some of the fiscal stimulus and government borrowing and debt issuance and those types of issues, that will then be an issue, but central banks have a long time before they have to deal with that.
All right, and we've seen a bounce in equities this morning as Paulson and Bernanke get ready and are testifying before Congress on the changes in the bailout plan. They're expected to get grilled pretty hard. Is anything they say going to change things, and how do you feel on the new plan for the bailout?
Well, the first thing I would note was that the stock market rally today, such as it was, is already fading fast, and this is symptomatic, I think, of the bear market that we're in. The comments from Paulson and Bernanke have not been especially revealing in terms of any new information. It seems to be more of a venting process for the legislators, taking them to task for not helping out homeowners enough. So and here then turning to the prospects for a new fiscal stimulus package, I think investors are likely to be better rewarded if they anticipate a weaker and a smaller fiscal stimulus package in this lame duck Congress than anticipating a large one. We're not going to get a more significant and supportive stimulus package until the new Congress convenes in January. So at that point, that's why I'm basically looking at markets as being left a twist in the wind at the moment. There's no instant relief on the horizon, and that also keeps me biased to the bearish side.
All right, and we've seen the yen down across the board today, down against the euro, the dollar, even the Aussie and the Kiwi. Is this just one more swing in this broad pendulum we've been seeing, and what are you strategizing for the yen?
I'm looking for an eventual breakdown in stocks, and today is going to be very significant. If we close below 850 in the S&P, that would we have not had a daily close below there, and that was the one of the key lows made back in October. What that would do then is basically initiate another leg down in U.S. stocks and likely other global shares, and that will then lead to a breakdown in the euro-dollar. We've been ranging in the dollar pairs for the better part of the last 5 or 6 sessions, and what that's likely to do is lead to a break below 124, 125 in the euro, and a new leg down there to probably test below 120. And then in the pound, for a drop under about 147, 147 and a half to initiate another leg down in sterling. And dollar yen, the equivalent level is about 94 and a half, 95, the lows we made last week. And so net, what I'd be looking for is a sharper decline in the yen crosses, and I think we could see euro yen back toward 114, 115 lows to use euro yen as the proxy.
All right, Brian, thank you so much for coming on the show today.
Thank you, Kathleen. Thanks for having me.
This has been your New York Forex Market Buzz with Brian Dolan of Forex.com. I'm Kathleen Reddington. Join us later this afternoon, 4 p.m. exchange right here on ForexTV.com.